Hello everybody, I'm Jason Lowe, Head of TAPS, which stands for the Association for Payroll Specialists. Welcome to JobKeeper Webinar number 3. I want to say a big hello to all the TAPS members who are joining us live today. For those of you who are watching us on YouTube, hello, welcome to TAPS. If you're not already a TAPS member, make sure you go and join us at payroll.com.au. For the last 30 years, TAPS has been keeping payroll people up to date with everything they need to know, including exciting webinars like this. So let's jump in and start today's webinar by saying hello to our very good friend, Chris Biddle.
Thank you, Jason. It's good to be with you again today. I think last time we had a webinar, we said, well, I'm not sure whether we'll need another one, but if we do, we'll be there. And here we are. There have been a few changes. So let's jump into what's happening. In particular, there's been some movement on dates that things need to happen.
There absolutely has, Chris, and we're going to start with a big shocker. But before I start, Chris, can you maybe lower your microphone a little? You're over-modulating just a tad. All right. So let's start off with Monday's news. There was a big change where they've extended the deadline to fix up your April payments for JobKeeper. And I have to say, this has come as a big surprise to the whole payroll community. I was speaking to the ATO very late on Friday afternoon, and they were stressing everything needs to be in by the 30th of April, 30 April, 30 April, 30 April. And then on the Monday in the afternoon, they changed it now to the 8th of May. So let's take a look at what that means by starting at the beginning. So we know that we have the JobKeeper scheme. You have been able to enroll in the JobKeeper scheme since the 20th of April. And the original plan was you could have all your JobKeeper data ready and up to date by the 30th of April. And as long as you did that, on the 4th of May, you would then be able to log in and make your very first claim for reimbursement and get that money back from the ATO. As we said, very late on Monday afternoon, without notice to anybody, the ATO decided that they would extend that deadline. So the good news is we now all have until the 8th of May to make sure that our employees are paid $1,500 for each fortnight, and we can then claim our payment from the ATO for April. Now, it creates a little bit of an interesting dilemma. All the messaging has been, be ready by the 30th of April, and what was going to happen after the 30th of April, what they would do is they would pull all that data from STP and use that to pre-populate the claims process. So when you logged in and claimed, they'd be able to say, right, we know that you have paid 200 or 2,000 or whatever the number might be. We know how many people you have been paying. Please confirm that this information is correct and we will give you your reimbursement. And the original plan was it would take them a couple of days to collect that data and have it all ready by the 4th of May when you made your first claim. Now that they have changed the date and given us until the 8th of May, it's a little unclear when you will actually get your money. So the good news is you have until the 8th of May to pay your employees for the month of April. What we don't know right now is, does that mean you can log in on the 9th of May and immediately claim your reimbursement, or will there be a little lag? And so far the ATO have been completely silent on this. So, two bits of information here. Good news, you now have until the 8th of May, and certainly we're going to share a lot of information today, which is brand new, and you might need some extra time now that you've got this extra information. But what I would encourage you to do is, if you can get it all done by tomorrow, which is the 30th of April, get it done, and you will definitely be able to claim on the 4th of May. The other interesting thing they did was they extended the date of enrollments. So you can enroll for April and May right through till the end of May. Now that creates a really interesting dilemma. You have to have paid everybody for April by the 8th of May, but you can enroll in the scheme as late as the 31st of May. There's a bit of a disconnect there. if you haven't paid people correctly by the 8th of May, when you enroll by the 31st of May, if they don't have all that STP data, it looks like you're not going to be able to claim that money. So I would be enrolling earlier, and certainly the earlier you enroll, certainly the earlier you pay your employees, the earlier you'll be able to get that money back from the ATO. But that's the latest news in terms of JobKeeper dates, Chris.
Okay, one thing around that, really, just to, some of the questions we've been getting on the helpline around enrolling and eligibility. Just to be clear, that once you're eligible and you enroll, first thing, if you're eligible, once you become eligible, you're eligible till the end of the scheme. You don't have to, recalculate, have a look at your turnover numbers month by month. So eligibility is a once-off event, correct?
Correct, yes. So once you're in for the whole 6 months, even if business starts to pick up, in month 5 or 6.
Okay, and the other thing is the enrolment date of the 31st of May. If you only become eligible later on, you can still enroll after May if the turn down of business happens later within the period of the scheme.
Oh, absolutely, yes. So you might be performing quite well right now, and your March figures and April figures might be looking really good, but things might fall apart in May. So once you then meet that eligibility criteria, you can jump into the scheme later and start paying from that point. So yes, you can enroll later once you become eligible. So that's perfectly acceptable as well.
Okay. So moving on, the 8th of May is now our significant date. And I certainly know many pay officers have been scrambling to make sure they got everything done by the 30th of April, and now it's the 8th of May. But what is it that has to be done by the 8th of May?
So because the ATO has been so late releasing information, and because there's a lot of work that needed to be done, and they're still working through a whole range of issues and building the system, we've been getting dribs and drabs of information over the last few weeks. So the original plan was for the month of April, there's an opportunity for you to catch up and fix everything in your payroll. And as I said, you used to have until the 30th of April to tidy up everything in the April payroll. You now have until the 8th of May to fix everything up for the April payroll. So based on the information you learned today, you've now got until the 8th of May. So how do we update this information? If you've got a regular pay run between now and the 8th of May, you can just fix everything in your next pay run for the month of April. And as long as it gets to the ATO by the 8th of May, you'll be fine. Alternatively, you might need to do some sort of an off-cycle payment to meet that deadline, in which case you can change everything that you need, do that off-cycle payroll and upload the file to the ATO by the 8th of May. Or depending on your system functionality, you might just be able to do an update event and send through the latest information to the ATO once again by the 8th of May. So the key deadline here is that the ATO must receive that information by the end of the day on the 8th of May. If they're receiving it on the 9th of May, that is too late. It needs to be at the ATO via STP on the 8th of May, assuming you're in the STP world. And then certainly in these webinars, we're only talking about STP people. If you're not part of STP, an entirely different process to follow.
Okay,
the last thing,
go on, Jess.
Can I just say, the last thing I wanted to stress here is you need to talk to your payroll software provider about how you do these updates. Certainly in the last webinar, we're going to talk about it again today, talking about start fortnights and finish fortnights. And we got an interesting call on the helpline during the week, and they said, right, we've been paying people because people have been at work. All we need to notify the ATO of is the start fortnight. So they rang us up and said, so can we just send that through as an update event? And unfortunately, the answer from us has to be, in theory, yes, that can be done. But to find out exactly what you need to do, you need to talk to your payroll software provider. We know when it comes to the fortnight start date, you can either send that through as $0, and that is the ATO's preferred method, or you might have to send it through as 1 cent. So depending on your payroll functionality, what that means is if you can just update everybody's file to have a fortnight start date with 0 cents, and your system is capable of creating an update event which sends all that information through to the ATO, then yes, correct. All you have to do is send an update event to the ATO. Alternatively, if your system can't send through allowance codes with 0 cents, what that means is you need to probably do an out-of-cycle pay run and put through the code with 1 cent against every person. And because people are now being paid, that is now a pay event. So you would have to send a pay event to the ATO. So certainly everything we're going to talk about today, we can give you the theory, but you need to talk to your payroll software provider to figure out which of these 3 options on the screen you can use. Can you just put it through in the next regular pay? Do you need to do an out-of-cycle pay event, or can you do it as an update event?
Okay. Now, we're talking about transition rules for the month of April. Just to be clear on what we mean by that, that's the JobKeeper month. So we're just talking fortnights 1 and 2.
Correct.
All right.
And certainly moving forward, Chris, what the ATO are saying, and have said all along and are still saying it, but who knows if they're going to change their mind, is that once we get past those first 2 fortnights and we're out of April, you need to make sure your employees are paid accurately each and every fortnight, making sure they get the $1,500 each and every fortnight. There will be no chance to go back and retrospectively fix things. Each fortnight will stand alone, and you'll need to get that information right. You can't just tidy it up at the end of the month. So April is the only month where we've got some flexibility and we can catch up by the 8th of May. But beyond those first 2 fortnights, you need to do everything correctly in those fortnights.
Okay. So we know some dates have changed, but that's not the only thing that's changed, has it, Chase?
No, the ATO surprised us with this one as well on Friday. And this is a change to their previous advice, which the ATO are referring to as a change of position. So they have changed the way they would like us to operate this. So it all comes down to the JobKeeper finish fortnight. So we know that if throughout the scheme an employee becomes no longer entitled to JobKeeper, we need to send through a JobKeeper finish fortnight code to let the ATO know that that person is no longer eligible for JobKeeper. Why might someone not be eligible for JobKeeper? Maybe they've gone off on workers' compensation, maybe they're going off on government paid parental leave, maybe they've resigned, maybe they have their visa has run out and they're no longer allowed to work. All those reasons mean that they're no longer entitled to JobKeeper, and you need to say to the ATO, this person can't receive it anymore. So originally what the ATO said is that they would like us to report that in the last fortnight that the person is paid, put through the JobKeeper finish code. The ATO have now changed their position on that, and they said that they want the finish fortnight to be reported in the first fortnight for which the employee is no longer entitled to JobKeeper. And probably best to explain it with the rules down below. So on the left-hand side in red is the old rule. An employee resigns in fortnight 4. What they said before was pay the employee as per normal in fortnight 4, ensuring they receive their full $1,500. And because that is the last time that they are getting paid, that is the last fortnight for which they are eligible, you would put through a fortnight finish date as fortnight 4. That is now incorrect advice. The new position on the ATO, using the exact same scenario, the employee resigns in fortnight 4, you still pay the employee as per normal in fortnight 4, ensuring they receive the full $1,500, but we would report fortnight 5 as the finish date, because that is the first fortnight that they are not entitled to JobKeeper. So when they see fortnight 5 finish date, the ATO will now read that and go, right, this person is not entitled to any money in fortnight 5, so they will get 0 money reimbursed by the ATO in fortnight 5.
Okay, a change of position. Interesting. Now, the other thing, this is not so much a change of a position, but a broadening out of explanation. When we talk about gross payments, and I guess what we're comparing or setting the $1,500 JobKeeper amount against, what happens with that? What's in?
Yeah. So the ATO have been very clear up until this point, and there has been one main rule which I harp on over and over and over again. It is your obligation to pay employees $1,500 every single fortnight. So that means if somebody is paid less than $1,500 in a fortnight, like our example here, they did $900 in ordinary time, $200 in overtime, there is an obligation for you to top up that pay an extra $300 to reach, $1,500. So at the very worst, if you only take one thing away from this webinar, you must always pay them at least $1,500. That money is not for you, it's meant to be passed on to the employee. Now, in my example here, I have included ordinary and overtime to come up with how much is that? 1,100. Does that add up?
No, your maths is wrong.
Oh, I'm having a shock. We've had to put these slides together very, very quickly. Yes, that doesn't add up. $900 ordinary, but it's good. I've got until, what date have I got? Until the
8th, apparently.
Yes, I've got till the 8th to fix it. I've got to tell everybody, the ATO are changing rules so quickly and so fast. Even I was getting updates, minutes before this webinar went live. This is just how crazy things are at the moment. So we're having to put these slides together really, really quickly. So yes, $900 plus $200 is $1,100. The JobKeeper top up in that case would be $400, so that we hit a $1,500 total. I'd included ordinary and overtime in that $1,500, but the question is, what else can we include in the $1,500 in terms of gross taxable payments to count towards the $1,500? And the ATO have only just released information about this on Friday. We got that information on Friday. It's still not up on the ATO website. We're told that it should be up either later today or tomorrow, but this is key. We'd all made some assumptions. The ATO kept on using the terminology, you have to top them up to $1,500 in gross taxable payments, but their definition of what that gross taxable payments might come as a little surprise to you. So let's look at what we can include towards meeting our $1,500. There's lots of things that we would assume. Gross salary and wages, allowances, overtime, bonuses and commissions, for example, all the things that we would typically include in, gross income. But there are a couple of surprises, and we're going to do examples for each of these over the next few slides. The first example is salary sacrifice. So if somebody enters into a salary sacrifice arrangement and some of that money is going towards superannuation, for example, even though we're not paying that money to them as cash, the money that we are sending as a salary sacrifice towards the superannuation fund can be included in the $1,500. The other big shocker in terms of what we can include in the $1,500 are pretty much all allowances, including those allowances which we pay at an ATO reasonable rate, and also allowances that we currently don't report at all through single touch payroll. In particular, things like overtime meal allowances. But you can see from this list here, there's a whole heap of allowances that are included: cents per kilometre, laundry, and so on. So pretty much every allowance can be included in that $1,500. Probably best to explain all this with some examples, and we'll get to that in just a moment. But I want to talk about what is excluded from the $1,500, and there are three really interesting ones here that I want to harp on today. Government paid parental leave and workers' compensation. You can't get workers' compensation money and JobKeeper at the same time, and the same rule applies for government paid parental leave and JobKeeper, but they are both interpreted slightly differently, so hold tight, we're going to do some examples on that. And the other thing which is absolutely not included in the $1,500 is reimbursement. Now, I do a lot of work-related travel, and while I'm doing that travel, I keep all my receipts, and I come back and I claim that through the office, and in our organisation, we pay that through accounts. But some organisations choose to pay reimbursements through payroll because it's just an easy way to get it done. Reimbursements are not considered a payroll cost, so if you're reimbursing an actual business expense for which somebody has a receipt and they are getting reimbursed, that is absolutely not included. But probably best to jump to some examples. Do you reckon, Chris?
That sounds like a good idea, Jason.
All right, so we've got a few examples that I wanted to talk about. the first one is Sharon. She's a part-time employee who has a total remuneration of $450 per week. But what Sharon decides to do is a salary sacrifice arrangement. So each week she says, pay me $350 in normal pay and put $100 into salary sacrifice for her. And we've just learnt that that $100 salary sacrifice can be included in our total payment of $1,500. Once again, I really need to stress this rule. We need to top up people's pay and ensure that they receive at least $1,500 a fortnight. So let's look at the example. Let's look at the top of the screen. So in week 1, we have to pay her $450. That is split up as $100 into salary sacrifice, $350 in ordinary time. That's $450 for the first week of the fortnight. In the second week of the fortnight, we pay her the exact same thing, $100 in salary sacrifice, $350 in ordinary. And we can see now over those 2 weeks, so far, we have paid her $900. She has not received her full $1,500, so we would need to do a top up of $600. And across the fortnight, now she has received $1,500. But interestingly, we can include that salary sacrifice component. Not normally part of gross taxable income, it's sent off to the super fund as a salary sacrifice, but in terms of our meeting our $1,500, that salary sacrifice can be included. I'm going to give you another option of how this can be done. Keeping in mind, we've got the JobKeeper scheme. The obligation is to pay $1,500 a fortnight, and there are a couple of ways that you can do this. In the first example, I fixed everything up in week 2 of the fortnight to make sure I balanced back to my $1,500. That is not the only way to go. Given that Sharon works a very clear pattern and always gets paid $450 a week, which is split into $350 normal and $100 in salary sacrifice, I could set up my payroll to make my life a little bit easier and average it out over the 2 weeks of the fortnight. So in week 1, I could pay her $100 salary sacrifice, $350 in ordinary pay, and then top up $300 to give me $750 for week 1. I could repeat that pattern in week 2, and then across the 2 fortnights, I've given her $1,500. So both of those options are reasonable, acceptable ways to get to our $1,500 per fortnight.
Okay, but option 2 is what you do if there was a very consistent standard pay, but you'd use option 1 if there was some variability about the weekly income.
Absolutely. And we've seen already, one of our members rang up and got themselves into a little bit of trouble. In week 1, they topped up to the $750. And then in week 2, the person did a whole heap of unanticipated hours. And let's say they'd earned, $1,000 in that second week of the fortnight. Now they had paid them, $1,750 across the fortnight. So they'd actually given them too much top up in pay 1 and had to recover that money. So I think option 1 is the safer way. It prevents overpayments, but it does require more manual intervention because every second week of the fortnight, you're going to have to go in and work out what the top up is.
Okay, thank you. So next example is about workers' comp, Jason?
Yes, workers' comp. So as we learnt before, you can't get workers' comp and government paid parental leave at the same time. The workers' comp money. Sorry, what did I say?
Government paid parental leave.
Right, yes, sorry. Workers' comp is not counted as part of your $1,500. So let's look at what appears to be a rather complex example. So Alistair is paid fortnightly, but was on workers' compensation for the first 2 fortnights. So of course he was on 100% workers' comp for the first 2 fortnights. He wasn't part of the JobKeeper scheme. He is returning to work in fortnight 3, and now he's returning to work in fortnight 3. That will be his first eligibility for JobKeeper. Let's take a look at fortnight 3 in a little bit more detail. In fortnight 3, that's made up of 2 weeks essentially. In the first week, let's assume he was still on workers' compensation, and then halfway through the fortnight, sometime in the second week, he actually returned back to work. What does that look like in the real world? So the last part of this little equation that I need to explain is that although he is returning to work in fortnight 3. Let's assume that everybody has been stood down and there is no work for him to do. So he is actually turning to work, but he's returning to work as a stood down employee. So he's going to have to get his $1,500. So in fortnight 3, looking at the example, this is the first time he becomes eligible for JobKeeper. What do we pay him in fortnight 3? We pay him his workers' compensation for the first week of the fortnight, and let's say we give him $600 for that. He's then back at work and he gets JobKeeper, and we learnt on that previous slide that any money that is paid in terms of workers' compensation is not counted towards the $1,500 total. So in this particular scenario, he is entitled to a full top up of $1,500 because the workers' compensation doesn't count. The other important thing to make note of here is he is now jumping into the JobKeeper scheme in fortnight 3. So we put through the JobKeeper start fortnight as fortnight 3 to let the ATO know. They'll see we've paid him the $1,500, and that is what the ATO will reimburse us. So in that fortnight, he earns a very nice income of $2,100 because he's getting all the JobKeeper and the workers' comp. In fortnight 4, when he is on 100% stand down, he's now, like everybody else, all he gets is the $1,500, and that all goes through as a top up. Let's say in fortnight 5, restrictions have been lifted a little and there's some work, and we can bring Alistair in to do a little bit of work. He comes in and does some work. He does $700 worth of work. Our obligation is only to top up another $800 to get to the $1,500. So that is workers' compensation.
Okay, now you preempted that we talk about government paid parental leave. I know that the Treasury documents say it's treated similar to workers' comp, but it's not really similar, is it?
Yes, it's similar but different, Chris. So
I see.
Let's have a look at an example to see how Treasury is explaining government paid parental leave. So let's assume Kate is paid fortnightly but has been on government paid parental leave, which ceases halfway through fortnight 2. So interesting to remind ourselves that during a period of unpaid parental leave, you are actually entitled to JobKeeper. So there are a lot of people who are out there at the moment on unpaid parental leave. They weren't expecting any income during this time, but the way the JobKeeper scheme has been written, if you're on any form of unpaid leave, including unpaid parental leave, you can claim the $1,500 for that employee. So those employees who were expecting no income, good news for them, they can now get $1,500 per fortnight. However, based on the Treasury advice, you cannot claim government paid parental leave and JobKeeper in the same fortnight. And that makes sense to me. You know, the government doesn't want to be giving you a whole heap of government paid parental leave money and at the same time also giving you JobKeeper money. You're getting, two government benefits at the same time, and the government are saying, nah, can't do that. So let's look at this scenario. So Katie's paid fortnightly, but was on government paid parental leave and returned to work halfway through fortnight 2. So in fortnight 2, we can assume she was on 1 week of government paid parental leave and we paid her $740, and then she started her unpaid parental leave. Now, if it was workers' compensation, we would have topped up $1,500 there. But what the Treasury is saying is when you're on government paid parental leave, you can't get government paid parental leave and JobKeeper in the same fortnight. So in fortnight 2, there's no top up. She is legitimately on 1 week of unpaid parental leave. However, that situation changes in fortnight 3. In fortnight 3, there has been no government paid parental leave. She's on an entire fortnight of leave without pay. And so that is when her entitlement to JobKeeper would start. So because she's on unpaid leave and off on unpaid parental leave, she's not at work, we put through a JobKeeper top up of $1,500, but we also notify the ATO that she is starting her entitlement to JobKeeper in fortnight 3, and we hit our total of $1,500.
Thank you very much.
So same, but different.
Yes, quite different. All right, let's continue to talk about the things that are included when we're sort of setting things against the JobKeeper. So a bit more on allowances, I think, Jason.
Yes. So we learned now from the ATO that all allowances are included, and that can include things like overtime meal allowance and overnight travel allowance. So let's look at an example here. So Wen is paid monthly and is a junior payroll officer earning $2,000 a month. Now, it's been a very busy month for all of us in payroll. Wen's been getting ready for JobKeeper, and as a result of that, she's been doing a lot of overtime over the last month, and has also become entitled to some overtime meal allowance. She's paid on the 15th of the month. What does her pay look like? So we would pay her monthly pay of $2,000. We would pay her overtime. Let's say that was $700, and then an overtime meal allowance. On 5 occasions, she worked so much overtime, it triggered an overtime meal allowance of $20, so she got $100 there. So far, we're up to $2,800 worth of income. Now, the interesting thing here is that $100 in overtime meal allowance, ordinarily, that's not even reported through single touch payroll, and it's certainly not taxable. It's a completely tax-free component, and a lot of time we don't even pay that through payroll. That might go through accounts payable, or it could go through payroll, but it is invisible to the ATO. They don't see it. We don't report it anywhere. What they are now saying is that $100 allowance can form part of the $1,500. So we've paid her $2,800. We need to do a top up of $200 to get her to her $3,000 in a month, because she's a monthly paid employee. And assuming that this is in the first, in April, she officially started the JobKeeper scheme right at the beginning. She's entitled for the whole month. So the JobKeeper start fortnight is fortnight 01. This makes sense to me. It is totally surprising, but it makes sense to me. And if you think about what the ATO's obligation or intention here is they are subsidizing your payroll. They know that you are paying your employees, who are at work, some money. They want to subsidize that money. So they have decided that even though that overtime meal allowance is not taxable and it's not reported via single touch payroll, it's a legitimate payroll cost. It's coming out of your pocket. They're allowing you to include that in the $1,500. And the good news is they've decided we only need to top up $200, not $300. We get to include that overtime meal allowance. So good news there, they're counting pretty much every single allowance. If I can add some more context to this example, we spoke about this last time, but when it comes to monthly paid employees, the fortnights obviously work a little bit differently. I made a decision here to top up Wen's pay to $3,000. And the reason I made that decision was because the ATO have explained, and this is in the last webinar, so if you haven't seen the last webinar, go and see it. The ATO have announced that in the month of April, they will reimburse us $3,000. In the month of May, it'll also be $3,000. In fact, it's $3,000 every month, but in the month of August, they're going to reimburse us $4,500 because the way the dates fall, there are 3 fortnights in August. So, as I explained last time, you have a decision to make. You can choose to pay employees in accordance with the ATO reimbursement scheme, and that's what I've decided here. I had to do a top up, but I'm only going to top up Wen's pay to $3,000 in this month because that's what I'm getting back from the ATO. But what I'll need to keep in mind is in August, I will need to top up her pay to $4,500 because that's what I'm going to get reimbursed by the ATO in August. The other option I could have used, and I decided not to use it in this particular case, is I could average out each of those months at $3,250. So I could have also topped up Wen's pay to $3,250 and done that every single month. So that was explained more in the last webinar, but there are some decisions you need to make in terms of monthly employees. Are you topping them up to the ATO schedule, or are you topping them up and using an average over the 6-month period?
Okay, Jess, we've talked about salary sacrifice, government paid parental leave, allowances. Have we forgotten about the dad and partner leave?
I haven't forgotten about the dad and partner leave. Let's have a look at an example of that. And this creates some very interesting challenges for us. We talked about government paid parental leave, where we said the government doesn't want to give you government paid parental leave and JobKeeper in the same fortnight. And the exact same thing here applies for dad and partner pay. You can't claim both of those in both the same fortnight. So I want to explain this example, which highlights that, but this example also highlights another thing which we talked about last time, which we made an assumption on, and that assumption was correct. Sometimes somebody will need to start JobKeeper then they will need to stop, maybe because they get dad and partner pay for a couple of weeks. And then when that is over, they will need to return back to work and start JobKeeper again. So this example explains how we stop and start JobKeeper. So in this example, Josh is paid fortnightly and earns $1,000 per fortnight. He's decided he's going to take 2 fortnights of unpaid parental leave, and then he's going to return to work after those 2 fortnights. Now, during those 2 fortnights of unpaid parental leave, in one of the fortnights, in fortnight 3 in particular, he's decided he's going to claim dad and partner pay. He won't be entitled to JobKeeper in that fortnight because you can only get one or the other. So we're going to have to stop his JobKeeper and then start it up again. So let's look at how this works. Starting at fortnight 1, nice easy fortnight. He gets his ordinary pay of $1,000, his JobKeeper top up of $500, and because it's the start of the JobKeeper scheme, we put through the JobKeeper start fortnight as 01, all good. In fortnight 2, he is 100% on unpaid parental leave, so he gets his JobKeeper top up for the entire month, $1,500 paid, we're all good. In fortnight 3, this is where he's going to claim dad and partner pay. So he's not entitled to JobKeeper for that week, so we need to put through a JobKeeper finish code. So in fortnight 3, we put through JobKeeper finish code 03. When the ATO sees this, remember there's a change in position. Originally, we probably would have put the JobKeeper finish code in under fortnight 2. That's not the case. We need to put it in the first full fortnight where they're not entitled to money. So when we put it through as JobKeeper finish code 03, they will say, right, in fortnight 3, this person is not entitled to any money from us. The ATO will stop payment in that particular fortnight. He'll get his dad and partner pay instead. And then in fortnight 4, he returns to work and he goes back to his normal pattern. He gets his ordinary pay of $1,000, his JobKeeper top up of $500, and he is opting back into the JobKeeper scheme. So we put the JobKeeper start fortnight as it needs to start again in fortnight 4. So that is the scenario there, but it creates an interesting dilemma. Dad and partner pay is not paid through payroll, and typically it's not something we need to worry about. An employee might come to us and say, right, I'm going to take 6 weeks off of unpaid parental leave to be with my new family, and you'd go, fine, you're on unpaid parental leave. There was no obligation for them to tell you that they were on dad or partner pay, because that was just a direct arrangement with Centrelink. We now have JobKeeper, and we know that JobKeeper can't be paid at the same time as somebody is receiving dad and partner pay, but how do we in payroll know that he's getting dad and partner pay? It's nothing we've ever asked before. There's no form for it, you know, nothing that he'd be aware he probably needs to tell us about. So, I mean, I think there's a dual obligation here. And this is, once again, new information. The ATO haven't explained how this process should work. So we're going to have to make some assumptions today. I, as a good professional payroll person, I would personally think partly my responsibility to reach out and say, right, oh, you've told me you're going off on, you know, 2 fortnights of unpaid parental leave. We'll continue to pay your JobKeeper. I just want to double check. You're not going to be receiving any dad and partner pay during that time, are you? Because we will need to stop the JobKeeper, you know, the JobKeeper payment. So if you can, I would be proactive. But I think there's also an equally important responsibility on Josh here to let his employer know that he's getting dad and partner pay and probably perhaps shouldn't be, you know, double dipping. So the ATO haven't defined whose obligation it is right now. So I think my advice in the short term is, if you're aware of a situation like this, you know, to save everyone a headache, you know, reach out and maybe make the first move.
Yeah, that makes sense. But you know, I think there's a clear onus on the employee to volunteer, but I think you're also right in saying they might not even think about the issue. But rest assured, the ATO will be aware of all the payments that are actually being made. So Jason, with so many changes and this whole thing happening so quickly, anyhow, it could come about that we didn't get everything right the first time.
That's right.
How do we deal with that?
Yeah, so the ATO have released some new information. If you have reported some of your JobKeeper codes incorrectly, they've shared some information about how to fix that, and I'm going to look at that now. once again, I'm giving you the theory now. You need to talk to your payroll software provider to make sure it's done and set up correctly in your system. So certainly absorb the theory, but work with your payroll software provider because there might be some nuances you need to be aware of in terms of making it work in the system. But I want to start with making corrections to the JobKeeper start fortnight. Let's say you have reported that wrong for a variety of reasons. Let's go through and figure out how you fix it. The first one is, what happens if we have highlighted a wrong employee? We assumed they may have been entitled to JobKeeper, and then we found out, oh, actually they weren't, or they've returned to their nomination form and said, actually, no, you can't be claiming it for me for whatever reason, and we need to stop it. So what the ATO says, if the wrong employee was reported as eligible using the start fortnight, then to cancel that employee, you put through a finish fortnight which matches the start fortnight. Probably best to explain it with an example. So in week 1, we paid this in person their ordinary pay of $2,000, and we said we believe they're eligible for JobKeeper and sent through the JobKeeper start fortnight. We paid them in week 2 and in week 3, and then in week 4, the person finally got back to us with their form and said, actually, I'm not eligible for JobKeeper. I don't want to be claiming it from you as an employer. He's obviously been at work. He's still entitled to that $2,000 ordinary pay that he's paid for, but we're not going to be able to claim the reimbursement, so we need to cancel it out. And what the ATO are saying is you put through a JobKeeper finish code, also a fortnight 01. So when they look at that for a month, they'll see for this employee, JobKeeper started in fortnight 1, JobKeeper finished in fortnight 1, the two codes will cancel each other out and the ATO will assume that they never started. So that's how to fix a wrong employee. Let's look at fixing an employee who has an incorrect start date. We maybe had put through a later start date and then we realized, oh, it should have been an earlier fortnight. And what the ATO say here is you can then just report the additional earlier start fortnight, and the ATO will pick up the earliest of the two. So let's look at an example here. In fortnight 1, we've got week 1 and week 2. We put $2,000 ordinary for both of those weeks. In week 3, we paid him another $2,000 ordinary. We're now in fortnight 2, and we've come to the TAPS webinar. We've learned all about JobKeeper, and go, yep, we're going to start him up from fortnight 2, and we put through fortnight start code 02, and you think you're good, and then you realise, hang on. He's actually eligible right from back at the beginning. He is actually, if we leave it as fortnight 2, we're only going to get $1,500 back from the ATO. He's actually entitled to the full 2 fortnights. We want the full $3,000. You can put through JobKeeper start fortnight 01. The ATO will now be seeing 2 codes, fortnight 2 and fortnight 1. Where they see 2 codes like that, they will go back and apply the earliest one. So you'll get the full $3,000 because they'll assume fortnight 1 is the correct one. Moving on to an incorrect start fortnight where we put through an earlier fortnight and it should have been a later fortnight. We need to mix those two methodologies that we just worked on together. So what you'd need to do is you would need to cancel out the incorrect start fortnight and put through a new start fortnight, which is correct. So looking at this, in week 1, the person's on workers' compensation. We paid them $3,100, and we incorrectly said, oh, they're entitled to JobKeeper, and we put through a JobKeeper start fortnight. And we know you can't be on workers' comp and get JobKeeper at the same time. We paid them their workers' comp in week 2. We also paid them their workers' comp in week 3. And then in week 4, they returned to work, and they did some ordinary work, and they did $4,000 worth of work, and we realized, oh, whoopsie, they're not actually entitled to JobKeeper until fortnight 2. We'd previously reported fortnight 1. So we need to cancel out the incorrect start fortnight. So what we would do is, first of all, we'd put through a JobKeeper finish start code of fortnight 1. So what the ATO is seeing is that it started in fortnight 1 and ended it in fortnight 1. And because those two have the same date, they will cancel each other out. And then we put JobKeeper start fortnight 2. The ATO will now use that as the official start fortnight. Now, this is some complex stuff. 2 warnings here. The design does not support multiple corrections. You can make one correction basically per person, but if you get the start date wrong and then you change it and then you want to change it to a third option, the system can't handle all of that. So although I've explained the theory here, this is complex stuff. You really need to talk to your payroll software provider about getting this right. The way you need to manipulate your system to put these codes in and make sure they're all through by the appropriate deadlines is something that only the payroll software provider can help you through. So it's good to know that there are solutions. These solutions have been shared with your payroll software provider, and they are making the appropriate changes to their systems to enable this. But all I can really share with you today is that theory. You really need to go to your payroll software provider to figure out how to make it work in the real world. And hopefully you've made no mistakes and you're good.
Of course, but before we move on to the next bit, Jace, that obviously if you make an error in what the start fortnight is, it's also possible that you've paid top up in a circumstance where really they weren't eligible for that for JobKeeper at all, so they weren't eligible for top up. Can you just reverse out the JobKeeper top up values?
No. So if we have incorrectly started and we've paid people and we've given them top up, that is an overpayment. And the overpayment rules that have always applied in the past continue to apply during coronavirus and during JobKeeper. So if you have overpaid somebody, you need to follow the normal process where basically you sit down, negotiate with the employee, come up with a repayment plan, reverse the appropriate data out of the information and start collecting that money. So that process remains the same, but if you've accidentally overpaid, that's a stock standard overpayment.
Okay, but once you've got that agreement, you can just use the JobKeeper code with a negative value to reverse it out.
That's right. So whenever we do an overpayment, you need to reverse that money. If you'd overpaid their ordinary time, you would reverse the overpayment out of ordinary. If you'd overpaid their overtime, you would reverse that out of overtime. So if you'd overpaid somebody their JobKeeper and that had been reported as a top up, when you fix your payroll system, you would need to reverse that out of JobKeeper top out. So all the same concepts apply.
Okay. All right, we worked out how to correct starts. How do we correct finishes?
So yes, correcting finishes is essentially the same as correcting starts, but it's a mirror image. So the same concepts in terms of cancelling things out and reporting 2 dates, and the ATO will pick the appropriate one. They all still apply. Given it's essentially a mirror image, my intention was not to go through that today. I've put up the ATO explanation as they have given it. So you can certainly go and read that. But once again, the key thing here is don't be acting alone. Talk to your payroll software provider about getting it right. And the other thing is don't forget that the fortnight finish code methodology has changed. So you need to keep those new rules in mind.
Okay. Now we also want to just talk through, I guess, a clarification or a reminder and another change of position or interpretation. I'm not sure which.
Yep. So 2 issues here. So when I was talking to the ATO on Friday, one of the things they were particularly concerned about, they'd been, particularly in the mainstream media and some other organisations, had been reporting some wrong information about the all-in, one-in concept that applies to JobKeeper. Some people were incorrectly reporting that you could choose which employees you wanted to include in the JobKeeper. So if you decided to enter the scheme, you say, right, we're going to just choose these employees, but we're not going to pay these employees. We'll leave them on stand down. That is not the case. If you decide to opt into the JobKeeper payment scheme, you must nominate all your eligible employees. They have made it very, very clear, and they've updated their advice on the ATO website that you can't cherry pick which employees you want to pick. And I think certainly in the worst case scenario, some businesses were saying, we don't like this particular employee, we're going to exclude that person, but we're going to pay everyone else. That is absolutely not allowed. But certainly when we first started the JobKeeper scheme, there was a thought that, we could just do the JobKeeper scheme for the employees who are at work, and we didn't need to worry about employees that have been stood down. That is absolutely not the case. If you enter into the JobKeeper scheme, every single eligible employee must be given the nomination form, and you must essentially, assuming they provide that form back in time, you must, do the top up or the payments for all employees. You can't cherry pick. The second change is a change that is in progress, and it's an interesting one. So we know when they first put out the advice, they said that if you were aged at least 16 on the 1st of March 2020, you would also be entitled to JobKeeper, as long as you met all the other criteria, that of being either a full-time or part-time employee, or being a casual employee who had worked on a regular basis for at least 12 months. But the scheme was originally going to everybody down to the age of 16. And it created some interesting scenarios, and we had quite a few calls on the TAPS helpline about this, where businesses might have employed, someone who was 17, for example, on a casual basis. They'd been doing this job for well over a year, so they certainly qualified. But because they were still at school, they might have only been working a few hours a week and maybe getting, $200 a fortnight, for example. They were now officially in the JobKeeper scheme. So normally they only earn $200 a fortnight. Now that JobKeeper comes in, they were entitled to be topped up to the full $1,500. All these young kids with casual and part-time jobs were suddenly going to be very, very rich. Only on Friday, the 24th of April, so last Friday, Treasury finally decided to change their opinion on this and go, hang on, this is perhaps costing us way too much money. If these 16 and 17-year-olds are full-time students and they're not financially independent, so we know a lot of them are just living at home with mum and dad, they have now decided they are not really eligible for the JobKeeper payment scheme, and Treasury have decided they would now like to exclude those people. And it makes sense. They're living at home with mum and dad. They don't need the $1,500 like everyone else does. So it creates a problem. For the first 2 fortnights of the scheme, we've been told very clearly that these people are in. Treasury have now decided that they would like these people out. So they are currently in the process of updating this information, and they've hinted that this information is coming on the ATO website. But what the Treasurer has indicated, that because many businesses have already paid these 16 and 17-year-olds for the first 2 weeks of the scheme, because you've paid them, they will get to keep that money and you'll be reimbursed that money and you're fine. But moving forward into fortnight 3, you should stop paying those employees immediately. Once again, we've got a dilemma here. On the nomination form, there's no indication that, it says that, if you are 16 or 17 and you are not financially independent, you don't get this money. You might have some 16 or 17-year-olds. You don't know whether they're financially independent or not. So once again, we need to keep our eye on what that latest advice is coming out from the ATO and Treasury around this. There may be some obligation for us to go back and double check with these people, maybe an obligation to go back and double check by giving them a new nomination form, which has some updated instructions. So we're just sort of all sitting tight, but waiting on that. But certainly if you have 16 or 17-year-olds and you think they're not financially independent, you should stop paying them moving forward, but there will be no obligation to recover that money in terms of an overpayment.
Okay, I think that's all we know for the time being, isn't it, Jason?
That's right. It's been crazy. This information is coming out very, very late, so it gives you a tight time frame to fix these things up. But we have that new deadline of May to get things up, so that is good. Last little word of wisdom for those of you particularly watching on YouTube who may not already be TAPS members. Please join us. We have a helpline, we have weekly email updates, we run training courses and seminars. So, if being up to date with payroll information is important, please join us at payroll.com.au. Otherwise, that is all for today. Who knows what next Wednesday will be and whether we have to do another webinar Wednesday. But for TAPS members, keep an eye on your weekly emails. And on behalf of Chris and I, thank you for joining us. Take care and continue to stay safe.